Hi everyone, thanks so much for joining the Life Design Analysis April webinar. I'm Charlie Conron, I'm the CTO and the founder of Life Design Analysis, and I think we have an exciting webinar for you this month. This month we really wanted to focus on exploring term conversions, so I think we've got a lot of great topics sort of around that area. We're going to go through the topics. It should take about an hour for the webinar, and we will record it so you can find this on our blog, lifedesignanalysis.com. Blog. You'll see it under the April webinar. So as soon as this finishes, there will be a recording live for it, so you can always view it again if you miss it. As I said, we're going to be covering term conversions. So we're going to start off and we're going to review an in-force policy. So we're going to show you how do you add that to Life Design Analysis, how do you set up a comparison with some of the conversion options, and I'll show you a couple different ways. So we're going to enter it manually as if, we requested the information from the carrier. It's a brand new sort of review. I'll also show you how you can save that for future off of new presentations. We're also going to highlight the cost of waiting. So after that, one of our popular concepts is to show a client who might be thinking about a conversion, but just procrastinating because, maybe they have a couple years left on that term policy. We'll show you how you can set up one of those cost of waiting comparisons to show them that it's more beneficial to convert at their current age rather than wait to the end of the term policy. We're also going to show you how you can estimate term renewals. So a lot of times I hear, that's great. I have this client who's come to me and says, I want to review my term policy, but you're not the agent of record and you don't have, you can't go to the carrier and request those renewals. So I'll show you a good way that you can estimate those renewals if you're dealing with, say, an orphan client or just a client looking for a second opinion. And I'll also show you how you can illustrate a partial conversion. So a lot of the times we might show our clients, a term conversion. They love the idea of permanent product, but maybe cash flow is an issue and we can't afford the full premium. We'll show you how to illustrate a partial conversion, how you can set that up. And then I have a couple other updates and just sort of general housekeeping items that we'll get to, new features in the system, introduced new notifications last month. So if you haven't checked that out, definitely do it. We've got a couple other exciting new notification items coming. One kind of spoiler alert, one is the birthday notification. We got a lot of feedback that people wanted it a little bit earlier so they had more time to respond. So we backed that up for a week before the client's birthday to give you a little bit more lead time in that. But as I said, we got a lot to cover. So without further ado, let's get started and jump into our first topic of exploring a term policy. Now, as always, I'm going to be illustrating this from Life Design Analysis, and if you're not familiar with our software and you're looking at this for the first time, remember you do always have the option for a 30-day free trial. Click the sign up free, start your free trial for 30 days. At the end of it, your subscription goes expired, and we take all major credit cards, and we have different packages for your needs in terms of features, as well as flexible payment options, so some savings to go yearly, but you can also go month to month. Remember, if you have any questions at all, reach out on our live chat. We also have full support. We're more than willing to help you with these case designs. So if you see something that you're interested but you don't quite know how to set it up for your client, or there's a slight variation, remember, reach out on our live chat. Of course, we're happy to schedule demos and walk you through the system and take a look at your needs. I'm going to set up our first example of just the very basic of how to review an in-force policy, and I'm going to set this up as a brand new client, though I'd like to loop back around and show you, sometimes when you do import these policies, you'll receive some of the information, so I want to show how you can augment that. And I also want to touch on, when you're presenting new product, when you sell it, how to mark it as sold so you never have to enter it manually like I'm going to show. So I'm going to start off here and I'm going to create a brand new client. And again, for this one, I'm just going to say this is Mr. Inforce. You can see I've created that before. Now, in trying to keep this as real as possible, I've actually asked for a real-life policy to review from our audience out there. And you can see, thank you, Ryan, for sending one in here. I've got a client, so I'm going to enter the personal information from that. And you can see I've blanked out sort of all the name and policy number and things like that. But this is an actual Manulife term policy that you can see was in force as of July 28, 2016. Now, the client, the birth date, October 31st, 74. So I'm just going to go back to the add case. I'm going to use that for the birth date. So we were talking 74. I think I said October, and I believe it was 13th. Now the day won't matter quite as much. I'll throw this in as male, and again, you can add all of the additional information for your clients. A lot of this comes from an import when you do import your clients, and you can start off with sort of the basic information and always augment that later in the client file. So you can always go in and edit a client or visit them to see what their information is. Now you can see this is a male age 44 right now, but the first step in really reviewing an in-force policy and comparing it to its conversion options is bringing bringing in the existing policy. Now, just because we just created this, I do want to quickly pop in, and I know I showed this last month, but I just wanted to show, kind of the contact information for this client. You can see, we started this case that we're just working on right now, but we haven't added any products to it. And you can also see there are no in-force policies for this client at this time. So we haven't done an import and we haven't added one in there. But I just want to show the evolution of where that gets added as we do it. So the first thing we want to do is we want to bring this Manulife policy, this coverage that, the summary that we've gotten here, and we want to bring it into Life Design Analysis. Now, you'll notice once we have in-force policies for a particular client, you'll see a plus in-force button, but because we don't have anything tied to that client, it's not going to show up. What I'm going to do to enter this is do a plus manual. So you can see I can select plus manual and I can select the particular term length. In our case, we're selecting a term 10 policy, so I'll select that from the list. But again, remember this works for any different length of term policy. Now you can see it brings up a case plan form, so it has things like a very generic name like a term 10, but I would recommend making this customizable for your client. So, we know this is a Manulife term 10, that might help us in the future, and we could also say that this is an existing or your existing Manulife term 10. And I could say, I could give it a little bit of an extra description, anything extra I wanted to put in there, like something like conversion options. But I'm going to scroll down. You can see here where we get to enter the initial premium. Now, for your in-force policies, when you do request them, you're going to see a guaranteed renewal schedule. So you can see this policy is for $1 million. It's a single life coverage and it is a term 10. As I scroll through the illustration, you're going to see there is going to be a guaranteed renewal schedule. And you can see this one's found here. It starts off $704. These are the annual premiums as well. So, you can enter them monthly or annually. Really depends on how your client's paying because there is that modal factor there. But essentially all I want to do is I want to enter this premium schedule that I'm seeing here, so 70404, and I want to bring it in each one of these for the 10-year period. So for the initial 10 years, what is the premium going to be? I'm going to take this number, 70404, and I'm just going to enter this in here. 704.04. Now, if you had a monthly premium in there, remember you just need to check the monthly box and enter the monthly ones in there, but I'm going to go annual because I have the annual policy here. So again, I've got the 704. After the first 10 years, it jumps to 5,410.08, so I'm going to enter that in there. So 5,410.08. From there, it jumps to $14,013.36. So 13, 14,013.36. 14,013, get those 36 cents. So I'm going to input that information, and you can see it keeps giving me the option for the next renewal. So after that 14,000, I hit my final renewal, 40,481. And there was 40 cents there. Now you can see it keeps giving me the option for another one. Depending on your client's age, you'll have more or less renewals. An older client will have less renewals till that renewable 2 age. A younger client will have more opportunity to renew that policy. So you'll see we always give you the option to enter one more, but when you run out of renewals, simply stop there. Now, being a Manulife policy, I don't have to go back. I know this one's renewable till age 80 and convertible till 75, but all of that information will be found in here as well. You can always take a look. And the one other thing that you might want to note here too is that this client happens to be a Health Style 2 client. And again, remember when they convert that policy, they're going to retain that rating. So just remember when you're quoting out new products, you absolutely can include that information. And then the last piece of detail that we need is that issue date. And I think I saw it before. It was July 28, 2016. So we want to enter that in there as well. So we're just going to put in here, it is 2016? It was 2016? Yeah, 2016. And July 28th. July 28th. Perfect. So we've got that in there. The next thing, when you do put an issue date in our system, we use that issue date for every anniversary of that policy. We're going to check that, and if it falls within our triggers, we're going to automate a policy for you. So once you do enter these and save them on a policy, you don't have to enter them again. And I'm just going to say that the policy number here is ABC123, and you can see I've obviously used that before. Now, I'm also going to put the insurance benefit just in case I bring it into another one. This one's $1 million. And again, really important here, if if you don't want to enter these in here anytime you review and you want to save it to that client file, just check that save as a policy. When I do that, you can see if it's a new sale, you can mark it as sold, and that will go towards the sales tracking. Because this one was from 2016, I'm just going to save it so that I don't have to ever update it. And you'll see hit save when you're done that form, and we're going to bring it in for you. Now, really quickly, you can see that the product is in there as well as all of those renewals. So we've got that renewal schedule on there. We've got the issue date. If I pop right back into Mr. Inforce here, you're going to notice that, now that case that we're working on has one product compared. But because we've marked that one and said save the policy, all of the information, the issue date, the policy number, the insurance benefit is brought into that policy side. And again, we're automatically going to be mining that, looking for those, when this policy falls into a certain opportunity, we're going to trigger that automation for you and give you that nice reminder. But just so you see how that happens, so when you mark something and save it to file, it saves it to that client file. And as you can see, again, now that Enforce Policy button has showed up where we can bring in a policy. And I'll show on another case after we compare this one, how you might be able to use that. Now, I want to go ahead and say what other products do we want to compare it to. So I'm going to throw in my $1 million insurance benefit. And for this one, it's going to be pretty simple. I mean, I'm going to use a minimum funded UL and a whole life product to show my comparison options. But remember, you're in control of what you want to show your clients in terms of, setup. So if you don't think they can afford a whole life, you may just want to go universal life. It's completely up to you in terms of what you're looking to do. I'm going to use the rate integration provided by LifeGuide. And if you're also watching this and haven't heard, we do have an exclusive discount for LifeGuide subscribers, so make sure you ask us about that when you're subscribing. Great discount for this sort of integration, this functionality. You can see I can say plus universal life, hit search, and I can do a search of the products on the market. So again, I can say a minimum funded T100, $1 million benefit, and again, I might even want to change my health risk to preferred and do a search of the market. And again, you can see I've got a listing of all the different products out there, and again, you can see, I've got my Manulife one that I'm going to convert to. Now, again, you can do a survey where you look at the whole market and add any product to it. So I've selected this one. I'm just going to say add to the case and add it in there. And I'm also going to add a whole life product to the case as well. Now with whole life, again, I have the ability to search rates, but I want to be really specific and I want to be able to show more than just the guaranteed values which come through our search integration that I talked about a little bit earlier. So what we do to get around that is we use the spreadsheets from the carrier software, and the reason we do this is we're able to get the total cash value, the reduced cash value, the guaranteed cash value, as well as pick up a lot of advanced fields like the ACB and some of these calculations of the insurance company. But I'll just show you, I'm just going to come back here over to Manulife software, and you can see I've got I want to customize it, so I've got a 44-year-old client here. I'm going to come back and customize my quote. So really anything you can design in the illustration software can be carried over to Life Design Analysis. I'll close out any old spreadsheet that I have there, and I'm going to design this one. I'm just going to do it as a 20 pay. Because I've got somewhat of a younger client here, and I want to keep that premium somewhat respectable. But remember, anything you design in here, including things like term riders, which I'll try and get to a little bit later, is going to be carried over. Really easy step though. You want to export the spreadsheet. So all the carrier softwares have this little button up here. Sometimes it's bigger, sometimes it looks a little different, but it's a spreadsheet view, and you want to click that. In Manulife's case, you can see right underneath that there's an export to Excel, and what it does is take all of this information from the spreadsheet, and as I said, it's quite robust in terms of the data that we get out of here. And again, we want to export it into Excel where we can actually bring it into Life Design Analysis. So again, we export it so that we can leverage it. Now there's really two ways we can do this. We can save the entire spreadsheet, so I could just click Save or File Save As, and I can pick a spot that I want to save it. So I'm just going to save it to my downloads and call this Manu Test as an example. And I'll save that. The other way would be simply grab everything and do a copy and paste. And maybe I'll get to both in this webinar, so we'll see here. So again, once we've saved the file, we don't really need it anymore. We come back to Life Design Analysis in our web browser here, and because we saved the entire file, all I want to do is say import the spreadsheet file here. So again, I'll just say import. And you can see it either brings up a drag and drop, so if you still have it like downloaded here, you can drag it in there, or you can open your file browser, look in your downloads, and again, I'm going to put the Manu Test one there. So again, you can see when I grab it from the file browser, it automatically starts uploading it, and you'll get a success message if it's been successful. If not, you'll get a red message saying, something has gone wrong. Most of the time it'll be successful. The only time I really see people get off bounds is when they're trying to import maybe a universal life into the whole life area or whole life into the universal life area. Again, remember, important to note, even though I did the search on the UL, same sort of functionality applies there. You can always drop a universal life quote from the illustration software in the same way that I did the whole life there. So if you're wanting to do, say, an overfunded UL, by all means, you can drop quotes in the same way. Now, really, again, I've got my presentation mostly set up. So I entered the existing plan, and then I put some ideas that we could convert to. Now, when we present this to our client, we want to be really clear, and we want to make it a little bit more marketing friendly to them. So again, remember, you can do things like go into the edit plan, and you can say this is not just Manulife Whole Life, this is Manulife Par. And you could say that this is, but you could also add things like no medical, something like that. And again, this could be an important factor if the other plans, like let's say a new Term 10 plan or a new Term 20 plan, require a medical, but Mr. Enforce's health has changed. As we know, we got Mr. Enforce at a Health Style 2, and that's going to carry favorably onto any of the conversion options versus going back to the market. Again, they may get a rated policy going forward and not be able to convert on that. So do keep that stuff in mind. Again, even with this UL, you can of course go into the edit plan and add something like no medical required. Again, a very positive selling point of a term conversion. So remember to include some of that information just to make it a little bit easier for your clients. Now, the other thing I want to do is I want to go down to the bottom here, and I want to look and add a little bit more detail around what a term conversion is. So a little bit of my marketing hat going on. My client might say term conversion, I don't even know what that means. Again, sometimes we're guilty of, we're really familiar with these terms and concepts, but our clients aren't. So we may want to add a little bit of a concept note. I'm going to add, of course, a term conversion note. And you can see these concepts that I'm picking from the global area here. These are system-wide. Remember, if you don't like the way we've worded it, or you want to make a slight modification, you want to add an additional benefit or maybe some cons, remember, you can clone these templates and make your own that you can use over and over. So if you have something that you're using currently, just go into the Manage Templates and add it. The other thing I'm going to do is I'm just going to take away a couple reports. I'm going to take away credit to the CDA. We're going to pretend this isn't a business owner. I'm going to take away by term invested difference and some of these IRR metrics. I mean, again, we can get into some of those maybe a little bit later, but for this one, I just want a really simple presentation focusing on sort of the costs. What's going to happen to this term policy? Again, it's not even that old, but I do want to show over time, some of the things that this client may want to keep their eye out for. So again, once you have the plans, of course, the in-force plan that you want in there, as well as the conversion options, all you have to do is hit Generate Report. So with the report, again, keep in mind if you're watching this for the first time, this is going to be your own branding. You can go ahead and set that in the account settings, upload your logo, choose your color palette, customize things like your mission statement. So think about adding things like the companies you're licensed with, things you want included in every single report. Again, we put a great concept note in there that starts off by describing what are the basics of term insurance, just in case you forgot. Again, talks about, policies generally expire at 80 or 85, talks about the traditional lengths. And remember, you can customize this, but again, really what we want is to have some of the benefits. Now again, next page is just basically a premium schedule, and you can see these are essentially the values that we entered in. You can see though the system has automatically adjusted knowing that we're 3 years into this policy because of the issue date, knowing that there's only 7 years left till that next renewal. So remember, it is going to take into account where you are in terms of time, because again, while you're 7 or 8 years into this policy, you don't have that much time to make a change. So again, it is important where we are in the policy, and again, important to show it that way. You can see again our conversion options. So we've got our UL, no medical required, and our participating whole life as well, no medical required. All three at $1 million, all three very different price points. But again, that's kind of the idea. And again, I know this Manulife Whole Life one is, a full conversion would be a really great sale, but not always a realistic one. So we're going to show a little later on how you can tackle this as a partial conversion as well. But again, a really great presentation that shows, this is the path you're on currently, and really puts into perspective over time how those renewals play out. I mean, even by age 71, well before life expectancy, we see that really high guaranteed renewal premium. Same thing when we look at the sum of premiums. Again, we see that the term policy is more expensive even right at year 31 there. Whole life policy remains more expensive the whole time, and that's just the nature of the premium schedule, as well as a little bit of the product design here. On this one we picked Manulife because it's a Manulife policy. Some of the other term conversions or conversions to permanent product may not be all that drastic in terms of initial premium, but that's okay. Generally with whole life, as you all know, the more premium that's put into it, generally the greater the values, and we'll see that kind of on the back end side of things. So when we do look at things like the premium deposit difference versus the cash value, again, we might view that in much more of a positive light. Again, you can see kind of the overall sum of the premiums of all the different plans, the insurance benefits and cash values of those respective plans as well. So just even seeing that, past age 80 here, that the coverage has expired and there's no more insurance coverage can be very dramatic. Remember, you can use these plus and minuses to break down if something falls on an odd year there. But again, really nice also showing how the insurance benefit on the whole life product or the participating one actually grows. So you can see it starts at $1 million and goes to $4 million. And that's why we might not go with the full $1 million of Manu, and we'll show that when we do a partial conversion. Again, great contact page and really good summary and review of clients' options. Now, I want to show another aspect here of how that could happen, and what I'm going to do is I'm just going to go into Mr. Inforce's statement again here, into their contact file, and I'm just going to spin up a brand new case here, so I'll say a new one. And I just wanted to show that once you save a policy in force, even if you didn't make that sale and next year rolls around, you get the notification, you should touch base with Mr. Inforce, and you say, okay, I want to show you your options again, and another year's come and gone, maybe the timing's right. Remember, in the future, once you've saved a policy, you can bring in any of those in-force policies. In this case, I know it was a term 10, so I'm going to select that from the list and hit save. And again, it's going to bring in any of the data associated with that policy. Now, the other thing I know you're thinking is, that's great for the ones I enter in there, but what about new product that I'm searching for? So again, when you do a product search, let's say for instance for term products, and you add them to certain cases. Ideally, you sell something out of the cases that you present, and when you do that, I want you to know that you can also go into this edit plan, just like we did where we marked that one as sold in the case plan form. When it's a product served from Life Guide, you have the same option, save as a policy, and mark as sold. And you can see this one's Canada Life Term 10 that I just randomly picked from the survey. Again, when I hit save, I'll need a policy number, and I don't want to give it the same one, so ZXY 987, I'll give it kind of the opposite, and I'll say this one's, it'll know based on the data, but I can put in a convertible till 75 age, and I need to give it an issue date, and I'll just say I purchased it today, and I'll click save. So that's the other way. Again, remember, as you use our system for new product and new pricing and new quotes out there to your clients with the new presentations, you can also mark those from the survey as sold, and same sort of effect. When you do mark it as sold, you can see it comes in with a unique issue date. That's what I just entered there. I entered the policy number, it's taken the insurance benefit, and again, the product type. So remember, when you mark things as sold and save them as a policy, it's going to add them to that policy mining and management. So, yes, you can import your policies and get a really good jump start on it, but I would really encourage going forward as you sell policies, mark them as sold, because then you don't have to manually enter them. You don't have to get these statements from the insurance carriers with the renewals, because remember, the carriers, they have the information where they can export you the statement, but they're never able to mass export those renewals, and we keep those for you. So again, same sort of situation. Let's say we mark this one as sold. We spin up even another new case for our Mr. Inforce here. So I'll make another new one. And now when we go to Inforce, we have the selection of the two policies. So remember, again, I can pull in that Canada Life policy that I had saved, and it brings in everything, the name, the issue date, and again, I can compare that to any new option out there. So really, that's how you would enter an existing policy, or two different ways you can save policies and enter them to Inforce. Again, remember, compare them to their conversion options. They make very compelling reports. And again, those conversions are a lot of really great client service, but a lot of really great revenue generating opportunity. So again, That's how you would review them. But the best way to really find them is, again, importing your clients into the system. When you do import all of your block of business, again, we make it really easy to request from the carriers, but you can do things like sort out all of those Term 10 conversions. So you might think about making April or a certain month of the year a term conversion campaign. We'll help you sort and filter those out. And again, remember, we put them in terms of your most pressing opportunities. So you can see, if it's April, I have this policy coming up June 7th, but again, following down all of these different policies, these are the ones that I want to get on top of and do policy reviews. And again, I guarantee, when clients see, how close they are to their renewals and they see some of the value of long-term products, you will see conversions on there and they will appreciate the review. On the other side of things, I've experienced that client letter that comes out. I've seen, the reaction from people who say, well, what do you mean my premium's going from 100 to 900? The letter goes out and it just says your premium's going from $700 a year to $5,400. Thanks. Contact customer service if you have any questions. And oftentimes that makes you look bad as a broker. Unfortunately, it's just something coming from the insurance company. So get around that with proactive client service. Remember, review these policies as you get the notification in LDA, create opportunities and cases, and then share them out with your clients. But again, term conversions, excellent source of revenue. All right, so moving into our next topic, I'm just going to go into my managed cases here and pick up some of those ones that we created. I'm going to look for that first one that we made here, and we're going to say, what if the client likes our presentation but says, I've still got plenty of time left, this one's only 3 years old, I've got 7 more years. What happens if I wait to convert later? Well, let's illustrate that. So what we're going to do is we're going to set up a cost of waiting scenario. So we've got our kind of Manulife par here, baseline numbers right now, as if they converted at age 44. But what we want to do is we want to model it out as if they're going to wait the 7 years and basically convert when they're 51. Now, normally we could just drop another Manulife spreadsheet at the increased age, but we want to factor in that there's some time there where they're going to be paying this other premium, and we also want to show that the delay in cash value is going to happen as well. So what I'm going to do is I'm actually going to use a manual whole life here. Now, when I add the manual whole life, you can see it's got a paste spreadsheet option. It's a little different from the regular one. And remember, just because it says whole life doesn't mean it has to be. We put that there just to kind of optically give you an idea. But really, this is more of an open-ended spreadsheet. So I'm going to say wait to convert. I'm going to give it a really descriptive name. And I'm going to say assumes current pricing, and that's about it, because they're still going to be able to convert in the future. But I do want to add the disclaimer because we don't know what is going to happen with this, whole life market. I could certainly say that, in 7 years, the premium schedule of the Manu policy and the cash values are bound to change. But, at least if we want to model it out now, we can. Now, remember, in this plan, we were paying $704.04. So I'm just going to highlight this number here and copy it for that $1 million of benefit. And again, I'm going to go into the paste spreadsheet here. And you can see what it does. It looks like it's just one row, but as you enter in values, you're going to see you're able to paste down. And what I'm going to do is I'm just going to sort of tab down here. And you can see I'm adding years 3, years 4, years 5, years 6, and year 7. And that's them continuing to pay the term policy. So even though I said this is a whole life, I'm entering in that term policy, assuming that they're going to keep paying this for the next 7 years. And again, they're not going to accumulate any cash value over that time. So I'm just going to add 0 values in here. And again, remember, you can compile this in Excel and paste directly rows down. And the insurance benefit was $1 million. 1, 2, 3, 4, 5, 6. And again, just for some brevity, I'm just going to copy that value and paste it down here. So that's basically them keeping their term policy for the next 7 years. Now, in that 8th year, they're going to say that's when we're going to decide to convert. So what I'm going to do is I'm going to go over to Manulife software here, and instead of having a 44-year-old, I'm going to make this person 51. And I'm going to update that scenario. Now you can see we've still got our old spreadsheet out. So just to refresh, it was about roughly $40,000, at their previous age. And you can see our new premium is $44,611. And again, even from here, I can just highlight all of the premium going forward. And you can see ours because we structured it as a 20 pay, is going to have 20 years of premium at that $44,661 cost. So you can't really see it, but I just did a copy from the illustration there. That's a perfectly acceptable way to copy and paste as well. So we usually take the whole spreadsheet, but when you're doing a plus manual, you can put in those individual values. And again, I'm just sort of tabbing here in between. I'm going to grab values for things like cash value. You could grab grant guaranteed. I'm going to grab the total cash value of the primary example. And again, if you did that copy and paste from there, just remember, just go make sure you're back up in cell number 1, highlight all the way down to the end. I just did a copy again, and I'm coming back to LDA. And again, just select the cell after that term policy. Now they're going to start accumulating cash in that first year. And again, I'm going to come back here, and I'm going to grab, again, remembering to go up to the top, I'm going to grab the total insurance benefit here. And again, this is only when you're doing cost of waiting or something outside the box. Most spreadsheets, as I say, dump in just like I did with the original Manulife plan. Again, you can see now they start getting those paid up additions. When you're doing this with a client, I'd recommend throwing in things like reduced, guaranteed, all of the different values. You can see I'm just scrolling over. All of them go over. For the sake of brevity, I'm going to put in the 3, but the process is the same to add the reduced values. When you're done, just hit upload, and you're going to have a great representation of them paying out that term policy, converting at the end there, and we're going to be able to compare that really, really nicely to how it would look if they converted today. Okay, and let's just assume, we've sort of made the point about the existing term and maybe the UL has little appeal to them. We can keep those in the report and simply maybe just want to hide them from the case. So I can say hide from report, hide the UL from report. We keep all the data, but we can easily compare just the visible ones. So one is, converting today, one is waiting to convert. And again, the whole idea here is we want to prove to them that, age is really the big factor. You're going to be leaving a lot on the table if you wait to convert. Yes, I know it seems like you'll pay a low price initially, but later on the increase in cost due to the age as well as the, delay in starting to accumulate those cash values is going to be the big factor. Well, let's go see if our premise is correct here. So you can see, again, we convert here, $39,000 versus, the next 7 years. We keep paying that term premium. Then we finally convert, and again, we pay that fee. It's almost roughly around $5,000 more per year. And again, we're going to pay that over 20 years. So that is going to add up a little bit. You can see sort of the low curve of waiting to convert. Of course, we're paying that term premium. Then our premium spikes up. We're not done, here in year 64, right before retirement. We're actually paying premiums all the way till we're 71. So this can be a big factor here. You might think about adding, you pay premiums longer because of the offset, things like that, like a 20 year. So you could add like a note here to that particular data point and really call that out. Also, when you look at the sum of premiums, so again, really the real, I think, consumer driver here is that consumers think, okay, well, that one premium is a lot less, so I'll just keep paying less, and yeah, I'll convert later and we'll be at the same. But they don't realize, again, that premium compounds over the years, so you ultimately end up paying more and paying it for longer, so deeper into perhaps that retirement number, more overall cost. Both of those things are not necessarily good things. Again, when we go down to look at cash value, we can look at, this is the original cash value, this is the wait to convert. I'm going to look at an overlay to really see the difference between those two. But again, same thing with insurance, individual charts for each. And again, sometimes I recommend when you're doing multiple cash value pages, you may want to go back to the design case and take away those individual ones in favor of these overlays. But you can see, the evidence is very clear, right? We start converting it earlier on. First of all, we prove that it's going to be less expensive overall. That's a positive. I think on that basis alone, that would make me personally as a consumer want to convert earlier. But I would also say, well, what about the cash value? Again, I'm putting more premium into it. Am I going to get more cash value out of it? And what you can see here is that that's not the case. So we start accumulating it later on before we even start seeing it, and it never catches up. So not only do we pay less in the one example, we actually have more cash value across the board. And we're going to see if that's true with the insurance benefit, and you can also see waiting to convert yields less insurance benefit overall, and that's because we're participating in the plan a lot less. We have less time to get dividends out of the plan. And again, you can bring in the reduced examples and things like that. So you could bring in the reduced example. I didn't put it in my convert one, so it won't. But when you design these, if you want to put it in there. Now again, the other thing that I think is really neat about this is sort of that presentation summary. So again, we see initially, of course, we're waiting to convert. We're only paying that term premium for a number of years. The savings is going to be quite substantial. So of course, we're paying a lot more by converting now versus savings. But I think long term, when we think about the big picture, and that's really what we want our clients to see, is that, we start netting even right in that 25th year. So right in when they're 69, maybe again thinking about retirement in this sort of area here, that's when we're starting to save them money because again you can see that it's more expensive to convert by $27,000 in that 25th year, and that cost grows and grows and grows until the offset finishes, and you can see the total difference that we would save for this client is $117,000. And again, that's not an insignificant premium to save them. But the other big thing is, as we showed before, is by waiting to convert, we're actually creating less value for ourselves as well, and that's where I think the substantial difference is. Because again, if we think about using some of this cash as retirement supplementation, again, by waiting to convert, we're actually down $500,000, and we're not talking about something insignificant here. That is a big value for a number of years, and that's why I really like the cost of waiting, because I think again there's a common misperception that it's just our health style, but it's also our age that factors into a lot of this. So again, really showing the cost of that age change, and again the timing around those values coming in. Same thing when we look at the insurance benefit. I think we already proved out that we had more insurance benefit, but look at this number. I mean, this is $1 million by around life expectancy that we're down by waiting. So again, I don't know anyone who wants to leave $500,000 of cash they could leverage in a loan, or $1 million of insurance benefit just by waiting, especially when it costs them $117,000 more. And that's why I think you can win cases by using the cost of waiting. But remember, it's a particularly important vehicle when you're doing things like a term conversion, especially if you have someone interested but they're maybe procrastinating a little bit. So I hope you can use that one. Now remember, if you want to review one of your cases like this, remember you can always ask us a question, because I know the cost of waiting is a little bit more of an advanced concept. But again, remember, very powerful to do it this way. Now, the next topic we have is, what about a client such as this one? And again, I'm just going to hide our par options here. Well, what about the client who had that existing term 10 here? So again, Mr. Enforce, we grabbed the renewal contract info and all those guaranteed renewals because we had the contract. But what if we're not the advisor on record? So what if we come across an orphan client and we need to be able to guess this renewal schedule, or we can't request it from the carrier? Well, one of the things we can do is estimate these renewals. And again, I'll show you a really good way to do this. Now, we know that this policy was issued in 2016 and was 3 years old. So that would have made Mr. Enforce about 41 at the time. Now, what I want to show here is what we're going to do is we're going to actually use the age override. So we're going to pretend we don't have the information on this policy. But if we ask our client, we say, okay, well, do you know who you bought the policy from? Usually they know, it starts with an M. Do you know how much? It comes out, X amount per month. Maybe, they probably know $1 million, and they probably know the monthly premium of the existing plan, but not necessarily any of the renewals. And again, we don't necessarily want to make our client do the homework and ask for a policy statement and mail it to us. If you're in a pinch and just want to conceptually show what an existing policy might do, again, remember, you can always use the client age override. So what I'm going to do here is I'm going to attempt to match this premium that we know comes from an existing policy statement, and we're going to see how close we can get. So what I'm going to do here is I am going to say age 41 using the client age override here. And again, you can use this either to backdate or forward date, but again, really good opportunity if you ever need to change that client age. And a lot of times, if you're wondering, you will see a client's age nearest underneath if they are. This particular client, falls in here. So what I'm going to do is I'm going to backdate this client's age to 41, which is the age they would have bought this existing policy at, and I'm going to do a term search here. So I'm just trying to simulate, roughly around what a policy would change. And of course, we have had changes in term pricing. Historically, at the time that this is recorded, term pricing has been going down. But again, if we're trying to guess and trying to give a conceptual representation, it's going to be a good one to do. And again, you can see we get family term 10 with vitality, excuse me. This one has a YRT renewal, which is a lot different than the policy that we had there. So I'm going to look for one that has more of a traditional renewal schedule. And again, knowing that term pricing has gone down, again, I may want to pick one of the more expensive options, or again, look for one that has a similar premium to that, the annual premium. So you can see we started at $704. If we look at maybe a Forester's Life Term 10 that's roughly around the same price, again, that might give us our closest representation. So don't necessarily worry if it is the exact company, again, because even that company's pricing has gone down, but look for one that's roughly around that same premium and follows the same pattern. Remember, again, we don't, this one has a traditional guaranteed schedule, not one of those YRT ones, so we may not want to add a YRT one, and that's why I'll pick the Foresters. It kind of closely resembles that initial price. Remember, again, you can even just get rid of this. It doesn't have to be any company. It just could be like estimated term premium, something like that. Again, I do want to give this one an issue date as well. I want to make it consistent with our other policy. And again, just refreshing, that was July 28, 2016. So I'm just going to put that as the same thing. Let me go back here, 2016 and July 28th. And again, I'll go ahead and save that. Only other thing I want to do before I actually generate this, we'll just wait till this loads, but I just want to change back the client age override. Come back down here, and again, I'll just get rid of this. We only use that to search for the rate of the estimated term premium, and again, now we want to generate at their existing age. So I'll go ahead and generate, and we'll just see how close we are. And again, looking at estimating this isn't intended to be perfect, but it is, if you're looking to estimate and simulate what the client's paying right now, again, find out when they bought it, what type of policy it is, and they usually know their monthly cost on it, and again, that should give you enough to kind of estimate what that renewal schedule looks like. And you can see, as I mentioned, traditionally term pricing has got a little bit more affordable, but you can see we're pretty much in the same ballpark. So 704, 710, we're being a little bit more generous, almost $1,000 a year on that next renewal, but that's okay. I mean, if anything, we're being more conservative in our estimate, but again, it's one of those things where even that sort of difference over time is not, generally huge in the grand scheme of things. When we look at the cost, I mean, we're pretty much dead on. So if you don't have, the term renewal schedule, don't necessarily sweat it too much. There are ways to estimate it based off of current pricing. Just make sure you disclaim that it is, an estimated term premium. But again, you can always, augment that later. It's a good representation to show them, what pricing they could expect from traditional term products. And again, as I say, this is a great way if you're dealing with an orphaned client, or if you're dealing with a client who maybe doesn't want to let their other advisor know they're looking for recommendations, and they know you're out there reviewing policies. Again, you might get a lot of these if you do sort of a term conversion campaign. Definitely check out one of our blog posts on that. But essentially, you can look for these policies to review even from clients that you might pick up on things like social media. So you might do a term conversion campaign, get someone who says, I have this policy, I bought it 4 years ago, here's my age, here's what I currently pay, can you review what it would be versus the conversion options? Well, that would be a great way for you to use these estimated premiums. And as I say, you may not be perfect, but as you can see, you can pretty closely resemble what they would be looking at. And in most cases, again, they're not going to want to pay that guaranteed renewal point, and that's really what we want to highlight. Now, just quickly before we move on to the next topic, which is a partial conversion, this is a good opportunity we can use this case. If ever like maybe we added a policy that was good to 85 here, and you wanted to clip this back just to, again, you knew you were trying to match sort of, as I talked about, that renewal schedule, but you wanted to clip it maybe to age 80. Remember, you could always go back to the case, and where this one says renewable to 85, again, remember, you can use that edit plan and just change that renewable to age, so we can clip off a certain number of times. So even if you know your policyholder wants to lapse the policy at a certain time point, remember to use that renewable to age. The other thing that's kind of a neat experiment that we may want to look at here is even just talking about sort of those YRT products. So if we remember our sort of, we picked the product that had a similar renewal schedule because we knew back with our policy it wasn't on that YRT. But if you wanted to see how those new policies sort of compare on pricing, it's a really neat experiment to do. So again, I could do the same sort of thing where I could say this client is 41. I'm going to do a term search here. and I'm just going to search for all companies here. Again, I'm going to pick the Manulife with Vitality and add it to the case, and I'll just show here just kind of how the YRT compares. So again, same sort of thing. I've added the YRT policy at the original age, just to show you how different the YRT schedule is than perhaps these traditional schedules here. And again, I'm going to do the same sort of thing, so I need to add this as an issue date, July 28, 2016. So again, I'm going to give it the issue date, July 28, 2016, and I will save this one. Okay, so we'll generate the report and take a look at what this looks like. Again, remember these are all sort of, we've got the one actual renewal schedule and the two are simulated. One is a YRT, and really what I wanted to just quickly show was just how that YRT compares. So let's take a look here. And I think this is kind of really interesting. So again, you see, sort of the traditional cycle, and now again, you do see the big increase when that renewal hits, and then every year after, that's that yearly renewable term schedule. And again, I find it's really nice to look at like this. And again, these are the estimated renewals here in blue. So I'm just going to kind of click the legend to get rid of them. But you can see again, it's not as drastic as the guaranteed renewal that we used to see in the past, but you can see the pricing points line up almost identically. So, it's a more gradual climb up to these, but again, at the same ages, we really are hitting the same premium. So, in a sense, it's nothing really new under the sun. Again, though, when we do look at, again, I'll get rid of the blue estimated one here, the YRT schedule with Vitality, overall, again, you can see it is a little bit more expensive. Not that I expect people to keep these policies through these renewals, but again, even if you went with that, you can see it's slightly more expensive than the traditional one, but these lines are not all that far off, especially if we're thinking about keeping insurance till 65 or something like that. So again, even if we used a simulated one like that, we could kind of line them up, but I find it somewhat interesting that when we look at these renewal points that they line up almost identically. So we're just kind of we're really looking more at the area under the curve, but there's a little bit more, as we can see, with the cost being greater over top there. That's one way to, you could kind of look at that as well, just as a kind of an interesting point of view. So let's move on to our last topic, and this is going to be around a partial conversion. I'm just going to clean up my case a little bit here, just so it gets a little faster generating. When we start to get a lot of plans on a page, it can slow down a little bit. So I'm going to get rid of the Vitality Term 10 and delete that from the case. I'm also going to get rid of the estimated renewal because we don't necessarily need that. We just wanted to show how you could use that, if you needed to. So I'll delete that one as well. Okay, now that we have that case all cleaned up, I want to move into the last concept, which is around a partial conversion. Now, because we're dealing with Manulife, they have a really neat feature with their product that I think still exists. Again, this is where I want you to check with your wholesaler. I'm not a Manulife wholesaler, so I don't know all the ins and outs, but from what I recall, Manulife has an interesting provision where when you convert or partially convert some of your term policy, they will reissue the remaining amount as a brand new term rider. And again, that's great, especially if you don't have to give medical evidence. So what we might find is that, we may present options to our client and they just may be out of their reach in terms of cash flow, maybe even just needs have changed. And I find this is particularly good opportunity with like a term 20 where someone might buy it at 40, but then, 55 near 60 where it's going to be renewing, drastic health changes and can be things like overweight, can be illness. Health can change at any moment, as we all know. One of the great parts about this conversion, though, is that, we're going to be able to convert a part of it and reissue that remaining amount. So you may want to consider, I think this is a good provision for anyone, but you may want to particularly consider this and look at your Manulife clients. And again, maybe even go into your managed clients there and sort out by Manulife. If you've had us import your block of business, we always put the carrier description in that product name, so you can actually sort by your carriers. And again, look through that list of clients that you have. You might notice some ones that perhaps their health has changed or perhaps they've been rated. And again, this would be a neat little sort of a provision within the contract that they can use. So essentially what they would do is convert a portion of the term policy and reissue the rest as a brand new term rider. And I'll try and look up and see if I can find that. I believe it's called carry forward, but I'm not entirely sure. Now, if you remember from before, we did up a Manulife illustration. So you can see I came over here and did up the Manulife par. We had it done at $1 million. Now, with the par, I think the lowest you can go, I believe it's $100,000. So if I put in like something like $25,000 as my base, you can see, 250. So I'm going to say 25,000, and you can see it's going to tell me, the minimum is $100,000. Now, $100,000 is still going to be quite a nice premium. So again, you certainly could do this option, throw in the term rider for $900,000 to make up the $1 million, because we know that our client would get it with no medical evidence required. One of the other things, though, and ManuPar is a great product, very strong product, particularly in cash values, though it does carry, I think, a somewhat heavy premium compared to some of the other par offerings on the market, or some of the other whole life offerings, I should say. This might be an opportunity, though, for a client who perhaps has cash flow issues, maybe even health issues, but is looking to maybe reissue that term rider at their given health status. Well, what you can see here is maybe this is an opportunity to use PMAX Gold. This product still exists out there. And I believe the minimum amount of coverage in PMAX Gold for permanent is $25,000 versus the $100,000. And the other thing is the PMAX Gold also has this term option. This is very similar to a economy or enhanced plan that you'll see from other manufacturers, where essentially a YRT is built, and the idea is basically the paid up additions, or the performance credit in this case, will replace the YRT so that it gets taken out of there. And again, ask your wholesaler about more of the details. I'm going to do lifetime guarantee. I think that's the most popular out there. And again, I'm selecting the term option. You can see much lower premium. So really what I'm trying to accomplish with this is give me the minimum amount that I need to convert the product so that I can take advantage of getting another term rider to match the overall amount. And you'll just see, the total $1 million is what I'm trying to accomplish here. You can see I have about $1,100,000, and then I actually design my term rider to fall off after 10 years. Really what I'm trying to accomplish is convert a little bit of this, but we'll refresh that term rider for you. So even if your client doesn't go for the full conversion, again, it might be a great option to convert to a partial conversion. And remember, even things, so any kind of product design, I talked about it a little bit before, things like term riders or exact coverage details that you're using here, again, everything can be carried over, same sort of process. So I just, again, same way I did with the ManuPar, I view the spreadsheet data, looks exactly the same, I export to Excel. It's going to give me the Excel sheet of all of the information about this plan, including where I've designed that term rider to fall off. So we're going to be left with the base, but that's going to be a positive for our clients. And this is a good opportunity to show the other method. I'll select everything. I'm just doing a copy, and I'm going to come back to our case here. And same way I added the other Manulife par product, our software is designed to read these spreadsheets, so we wanted to make it easy on you. You can dump any sort of whole life or permanent product into there. If it's universal life, you'd use the UL button, but any sort of spreadsheet for that particular product type will actually apply in there. So even though this one's a PMAX, we've designed the system to read both spreadsheets. And again, you can see it's imported successfully. And I'll just edit this plan here and just say this is Manulife partial conversion. Okay. And I'll just go ahead and save that. So remember, even if your clients, maybe you sense some interest in terms of, they like the idea of the conversion, perhaps, things have changed in their life, or they're trying to retain that health style that they got just in terms of cost. A lot of times, quite frankly, it's convenience. Term conversions are convenient if I don't have to take a medical. A lot of times, it's not that I'm not healthy, it's just that's I'm busy and I don't want to do that. So this can be a very nice value add that you're letting your clients know about, giving them the information. Let's take a look at what the case looks like. Again, I think this one takes advantage of a really nice provision in that policy. So do get in touch with your wholesaler. And again, I'll quickly touch on a little bit after this just where you might go in and sort your Manulife policy. But again, you can see we've designed a plan with a really nice price structure. And it's going to be hard to say no to something that's not increasing in cost that we bought them some time. And again, we lapse that coverage, so we're going to see a different sort of coverage schedule. Of course, in our other our plan here, we're keeping the coverage in force. So, maybe looking at more rewriting that term as you come out of there. But again, I think, the big part that I see is that we're giving them some options. So we're giving them a little bit more time on their term policy. That's great. They don't have to take a medical, so that's convenient. And we've built some long-term cash for them, as well as some permanent insurance base. So, even if their needs have changed, they do the partial conversion. We take care of them with a little bit more term. At age 54, maybe they're thinking about retirement. We still have a nice base of $20,000, $30,000, $40,000 by life expectancy. And again, we can use those for sort of final expenses costs. So this might be more of your, sort of what we call the family market scenario. But remember that, you don't have to go for the full home run with term conversions. You can do partial conversions. And again, look into other carriers. I know about the Manulife one. I saw it at a presentation I was presenting at. And I thought, that's a great one for looking for, my mind jumped to rated clients because again, for using sort of that enhancement or that term dividend option with Manu, and using the PMAX, you can get quite a low affordable premium. And then again, as I say, if I think this applies to term 20 policies too. So where I issued a new term 10 for the remainder, again, if you had a term 20 client, I think you can get a new term 20 on there. Again, if you've had us import, again, as I say, just type in things like, in the policy name under your clients, type in something like Manulife. It'll search through all of the clients and again, let you know where your Manulife policies are. So again, I've done some imports. You can see I have various different Manulifes, and I might want to start looking at these clients and saying, okay, you've got a T20, touch base with them, check on the sort by issue date and find your oldest T20s. And again, if you were at year 19 of that T20 and you could convert, a little bit into permanent and have the rest reissued, again, I think that's a value add that you can bring to your clients, and I think they'll see kind of the value in the advice that you're giving there. And again, truly, that's where we see the power of advisors. Robos aren't thinking of this, and that's where we need to get creative and use tools like life design analysis to surface this information and then present it to our clients. So that really brings us to the last topic. I just wanted to briefly cover some housekeeping and updates. Last month I touched a little bit on the notifications update. So now I'll just kind of retouch on it again. Now you're able to sort by the type of notification that you get. So things like conversion opportunities in the system when we notify you there. Again, you can select a certain filter, give it a second to update, and it will update to show you all of those term 10 policies. Again, even things like birth dates, you can always sort between as well. So I can go to my birthdays and sort between them. And again, we changed that birthday notification so that now you should see these coming out the week in advance. So it should give you a little bit more time. I talked about that at the beginning. In terms of product updates, into our new UL section, so if I go back to my last case, in my UL section here, we've added the Avari layered plan, so a new spreadsheet under Avari there. We had it under UL before, but now you can do the specifically layered plan. Of course, groups. So if you're on the main dashboard, you'll probably notice that groups has been more prominent there. This is so you can collaborate. So again, if you're a wholesaler, create groups with your advisors. If you're an AGA office, remember, you can have a paraplanner connect and create your cases, and then you have your presented by name and have all the access to them. But again, you can collaborate. And again, remember, you can use this with your carrier wholesalers as well. So a lot of carriers out there have wholesaler accounts where an advanced case specialist can help you design it in LDA and just transfer it down to your account. You can then present it with all of your branding. So do check out groups. A couple other updates in terms of content. I would encourage everyone to go into the blog, check out some of the new articles. We did a couple carriers had software updates, so we've updated our carrier software one. Our 13 reasons why people don't buy life insurance blog is out there. Really good read if you ask me, but I'm a little bit biased there. So do go check that out. And we also did an update to our CI article, so go check it out. There's a free downloadable template. Other than that, that wraps up our webinar. I wanted to thank everyone for participating and look forward for you joining future webinars. Thanks so much. Take care.